This is Glen Yelton, Head of ESG Client Strategies at Invesco. Here today to speak to you about green finance, its current context, and some expected trends related to green finance globally. There are going to be three elements that I will discuss today. I'm going to talk a little bit about how this particular area continues to accelerate. We're going to talk a bit about how it represents opportunity. And then finally, I'm going to speak a bit about how it will not solve the challenge alone. On the first point, when we think about the way that this particular area continues to accelerate, we have seen over the past several years, basically since 2017, an acceleration of flows into ESG-related products globally. And ESG products is a very broad class of investment vehicles, and it's not just limited to green finance. So we do need to unpack that just a little bit. When we think about the concept of ESG, ESG exists along a spectrum, ranging from ESG integration, which is the use of fundamentally material and relevant E, S, or G factors in the investment decision-making process. That's all about investing. So you have ESG integration, and then you move all the way over to where you have dedicated ESG strategies that are focused on an additionality, a secondary outcome associated with the capital allocation. Historically, the numbers related to ESG, the $1 in $3 type number that you see published by certain organizations, encompasses that full spectrum. We need to tease out a little bit as we talk about green finance in particular. We need to tease out what it actually does mean, particularly whenever it comes to that element that we're focused on today, on green finance. Within ESG integration, that again, the use of environmental, social, or governance factors to make investment decisions. So to determine the valuation of a security, to evaluate risk, to identify opportunity. Those are fundamental day-to-day activities undertaken by investment managers. And that's a bit distinct from what we are talking about. As you can sort of understand, that's distinct from directly allocating into green finance. There may be green elements under consideration in ESG integration, particularly as it relates to climate and associated risk factors, but it's not the green that is the ultimate outcome of the allocation model. It's all about ensuring that the investment is appropriate for participating shareholders, participating fund holders. That's the majority of the number that we're talking about from organizations like GSIA. ESG integration is not what is needed directly for green finance. What's needed are those explicit green vehicles to invest in. That overall growth continues to accelerate. Again, we cannot step away from that, what we've seen from 2017 through 2018, 2019, 2020, and now into 21 has just been dramatic. Looking just at trading volume, according to Deutsche Börse last month, the monthly trading volume more than tripled compared to a year ago. So 3 times as many ESG-focused trades being executed on that particular exchange. When we look at numbers from Morningstar, they indicate there's about $1.7 trillion in ESG funds right now, double what there were 2 years ago. So again, we're seeing that very dramatic acceleration, capital allocation into the realm of ESG investing, including green finance. Exact numbers are hard to nail down. They range from, again, 1 out of every $3, which I believe is a very inflated and conflated number, down to roughly in the single digits of overall asset allocation globally in ESG dedicated strategies, somewhere around 7 to 10% based on numbers released by Cerulli earlier this year. And that feels more right. That feels closer to where the number is, given the way that when you look at overall market vehicles and market trends, we're not seeing dramatic shifts of capital overall. We're seeing these moves, so high profile, but we're just seeing these general moves in this direction. And that continued acceleration, when we talk about green finance, though, is critical. Because in order to underpin and support green finance opportunities, there have to be investors, has to be capital that is ready to be allocated into these type of investment vehicles. Because absent that investor demand, absent that drive by an investor to push their money to do more than just earn a return, we don't have the foundation to grow and support the green finance opportunities that we need to over the next decade to 3 decades. That finally on the acceleration, it doesn't feel like it's ebbing yet. It doesn't seem to be slowing down. The numbers that I just talked about, monthly trading volume being more than triple year on year, overall assets doubling in 2 years. That is that continuation of a curve that started roughly in 2017. And we're seeing that support in other ways. If we look at things like Google keyword analytics, when they're searching for terms related to ESG, including climate transition, human rights, etc. It's that same growth chart over the past several years. So investor awareness of this particular topic has grown to a point where it is driving and supporting and paralleling what we're seeing in those asset growth numbers. That's the way it should be, right? We should be seeing that correlation between search queries and actual capital allocation into ESG vehicles. It's just a direct correlation, a direct result of that increased level of interest. It does vary region by region, which is another thing to bear in mind. We have not just investor interest and investor demand, but we do have regulatory components that are driving some of the allocation models globally. And this is supporting the overall green finance market itself. And those sorts of regulatory regimes, the activities that we see there from Europe, we've seen SFDR where phase 2 is in effect. In that particular case, asset managers have to do a distinct classification of their funds, indicating the sustainable outcomes associated with them, as well as how they are integrating ESG factors. In the US, the Biden administration has issued a number of executive orders, particularly focused on climate, so tying into that green finance. The SEC is looking at disclosure and risk associated with these factors, particularly, again, on climate change. Canada is doing similar actions. What we've seen in China, the guiding opinions on promoting investment and financing to address climate change came out in 2020. We're seeing some of that influence in market today. There's an emphasis on the necessity for regulators to support and incentivize financial institutions to develop and support climate and green finance products and projects. So here we're tying back into that green finance, right? India, similar thing. SEBI is set to roll out guidelines on ESG disclosure. In Hong Kong, the SFC has proposed rules asking fund companies to incorporate climate factors into investment decisions and risk mitigation. And in Taiwan, we're seeing the FSC there impose more stringent rules for funds that are claiming to be ESG. Again, particularly around climate and climate-related disclosure, tying into that green finance. I want to zero in on China for one moment. That's the second largest green bond market in the world. And the driving forces that we're seeing for a lot of this interest there were driven by that client interest we were talking about, policy and regulatory frameworks that we were just describing, overall market actions on how things are moving around and issuers are. And then finally, there's industry pressure where peer companies may be issuing a green bond or greening up their operations, and as a result, a company is forced to do that through that industry pressure. There's an existing emissions trading scheme in place in China. There's a green bond endorsed project catalog, so that highlights the type of things that can receive green financing. They're focused on carbon neutrality on net zero by 2060. They have an electric vehicle sales goal in place now by 2025. And that's all supported and flowing into the investor side by over 20 ESG-focused funds rolling out in 2021. So that's China. We move to a different market. We move to Nigeria and Kenya and Africa. So we're talking about global green finance. Similar factors in play in those two markets. Client interest has increased. There's a policy and regulatory component in play. Some market actions and industry pressure, a bit more limited in scale than what we're describing in China. 2017, Kenya introduced a stewardship code for institutional investors, which included green finance components. 2018, Nigeria did the same, a corporate governance code, some elements related to ESG in that. 2020, the African Green Bond Toolkit was released, providing guidance on sovereign and sub-sovereign and corporate issuers on how they can actually roll out green finance debt instruments, what the criteria that should be used are in play. And there's now a green bond segment on the Nigerian Stock Exchange. Sort of expected, Nigeria issued their first green bond recently. So a lot of emphasis, China, Nigeria, and Kenya, this global interest on green finance. That takes us to the second point I was going to talk about today, about how this represents opportunity. So green bonds, a big component of the green finance and the trend that we're describing here, the way that assets are moving. Green bond sales continue to grow. In 2021, we expect globally to see over $500 billion US in issuance of green bonds. That's significantly more than what we saw in 2020, which was more than 2019, which was more than 2018. So that growth is there, like we were describing in other components of the ESG investing space. One of the big changes in 2021 is the number of sovereign issuers coming into market. We expect to see a continued issuance from European issuers, from Asian issuers, and as we were talking about earlier, there should be some of the African sovereign players rolling into the green market in 2021. Of particular note on the green bond space is the European Union is bringing their pandemic recovery funding to market, to the bond market. 30% of that, I think it's roughly $980 billion, is slated for green projects. It's an amazing amount of green bond issuance that is coming in that's sustainable, that's focused on these positive outcomes down the road. There are additional opportunities. So the green bond is one component. The sustainability bonds, anything that falls under that ESG bond label, one area of opportunity. There are also the opportunities related to particular equity issuers, particular companies that are developing technologies that are relevant to green finance and the green transition. The most critical components of those are companies that are in that cusp of building out, rolling out battery storage, renewable energy, et cetera. There are opportunities there for investors to pursue for green financing. So it doesn't just accelerate, it represents opportunity. But finally, green finance is not going to solve the challenge alone. Investors cannot underpin the lift that is necessary to support something like a net zero outcome by 2050. Investors are part of the green finance need. They will be driving that. They will be consumers of bonds. They will be investing in these companies. But supplemental to that, we need to see action by national governments, by regional governments, by private companies and private citizens. There's a lot more that is going to have to drive a transition to a greener future than just green finance itself. It is a piece of the puzzle. It is key and critical, but it is not the entire solution. So as we look forward over the next 10 to 15 years, my expectation is that we will see a continued issuance of green finance. We'll see new companies coming to market that are blockbuster companies that are focused on this because it is a global issue, a global challenge. But absent sovereign level, national government level, regional and multinational action on regulations, it's going to be a very big challenge that goes for a very long time. So I want to thank you for taking some time to listen to my comments and my opinions on green finance. I hope that if there are any questions that those can be sent to me, we can process that and I can respond as needed. Again, I appreciate the time with you today, and I hope that you stay happy, healthy, and safe. Thank you.